following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. And I would start the show here with the most famous stock in the world, of course, which is Apple. And as you can see, we have this ABCD structure that we've been talking about for the past couple of weeks. 2 weeks ago, we had the earnings in Apple. The market reacted negatively to that. Then it rallied to a 382 retracement of that move down from early July. And that sets up an ABCD structure down to the 115 level. We're trading at just a little under 118 right now. So there's a couple more dollars to go, I believe, in Apple to the downside. What's interesting about this is that Apple is now below the 200-day moving average, I believe, and everyone that has bought the stock since January is now underwater. Because in January, it was, oh, that's not right. I made that, made a mistake on that one. Sorry, it is not correct. It's everybody that's bought the stock since February is now underwater, but not January, because January we were trading at 105, and in February we were trading at 118. So that's what it's looking like right now with the Apple. So I respectfully make that correction here, because we are still up on the year, but we are heading down, and the people that bought over the last 5 months are certainly a little bit disappointed, I'm sure. And this stock certainly gets its share of wonderful news. Now, I've also had a request to take in another stock that we've been talking about recently because of the earnings that came out on that just a few days ago, and that is Twitter, because we've had a ABCD structure in Twitter going back to last October. That measures down to the 129, excuse me, it used to be 129, to the $29 per share level. We're trading at around 29.12, somewhere in that ballpark right now. But we did leave a gap down. However, that gap down is really, it was really not what happened, because the market after hours in Twitter opened at $41. I happened to be watching the earnings that day because they were talking about it so much, and I like to see how these things react to it. But it went from 41 and then all the way back down to be down on the day, and that's, of course, when it opened, because that was all pre-market. And that's another reason why I certainly don't trust the pre-market indications that we see in some of these, because they change, so dramatically, and I'm not sure the volumes. We're talking, very low volumes in the hundreds of thousands of shares, as opposed, to the millions of shares like we get with Apple and Intel and, some of the other stocks that we watch. So those are things that we have to really try to understand, the market dynamics a little bit, to see how these markets respond, to the news. We've seen this over and over again in many different things. To do the same thing with CMG, that Chipotle Mexican Grill. It was down about 10%, and then when the what do they call that? When the Squawk Box, when they talked about the guidance, when they give the guidance, well, the guidance was good, and so it went from -10 to +30. So it's you get a lot of variations here in those early morning hours to see what's actually happening. Now, I did talk yesterday about the Bradley model from 1987, and my good friend Shane Smolian, co-author of the book Astro Cycles, was kind enough to send me the chart from 1987, and I just wanted to show you, that the market, the Bradley model, was describing a move down into October. Actually, the low came in on the 20th, and so that was one of the things that it was looking for during that time. So it's far from perfect, folks. Believe me, the Bradley model is very, very highly dependent upon probabilities. Let's put it that way. The reason why I do the Bradley model is because when I first started studying astrology back in real heavily, I mean, I looked at it back in the 60s and 70s when I was studying W.D. Gann, but I became involved with it very, very heavily when I met Dr. Ruth Miller back in 1986. And then for the next year, all I did was study the astrology, and all I studied was the number part. I didn't study about the moon in Aquarius and, what these different signs mean like Norm Winsky does, and he does a great job at it. But I only basically looked at what the days were going to be. In other words, if a certain day hit, that's what I wanted to know. And the way we did this is that we had all of the data from 1885. Jim Twentyman and I had accumulated that over a period of many years. And when we worked at Commodity Corporation together, we had access to, huge data banks, so we could keep this data, and be able to research it when we wanted to do it. So all we had to do was to get someone to help us with the astrological part, and that's what Dr. Miller did. And she said, these are the key dates, or the key aspects that you want to watch. And so we asked Neil Michelson at Astro Computing down in San Diego. And what they did was they matched the dates to the dates that we had with our charts. And if we had a hit that came out better than 3 out of 4, we were looking for around 70%. We thought that was statistical. So we went back and studied those, and we'd like to have at least 100 samples, on some of these things. And when you're going back, to 1885 and it's 1986, that's only 100 years. And some of these only happen, 4 times in 100 years. That's not a very good sample size. So you've got to do the shorter term cycles, and that's what we tried to do, was the ones that were related to Mercury, Venus, Mars and Jupiter. Those are the ones that we really tried to focus on. And those are the ones that Dr. David Williams, Commander David Williams, talked about in his book about financial astrology back in the 60s. And that was the Bible during that time. So there's a lot of things that are there, but boy, there's a lot of holes in it too, believe me, folks. The date that we had coming in on the 6th, Larry, let's slow down a bit. The date that we had coming in on on August the 3rd, is highly dependent upon that new moon, the full moon that we had on July 31st, which was a key date around the 30th and 31st. That because of the weekend, it could extend into Monday, and that's the market actually topped on a Friday. That's where at least where the Nasdaq and the Dow and the S&P and the New York Stock Exchange Index topped at that time. And there's a little bit of a sell-off, and that's all it is so far, is a very, very small sell-off. So I'm always trying to put a caveat out there that these things are they're only probabilities. They're certainly far from, being mortal locks, or if you want to call it something like that. But you never want to bet the farm, on any of these patterns, because they are highly based on probabilities. And to give you a perfect example of that is this one had nothing to do with the astrology, but I wanted to mention to you, the trade that I was looking at yesterday, and that was in the Treasury bonds, because I thought they were going to stop around the 157 level, which was right near the long-term 1.27s going back over the last several months. Well, the market stopped there for a very short period of time, and then right after we were off the air, the market continued to go higher and went all the way up to almost the 158 level. Well, once it goes through one level, what I have to do is I say, okay, I did something wrong here. I don't want to stand in front of this freight train. So what would be the next thing that I would be looking for? And that would be the 1.618 expansions of these moves, and that would take us all the way up to nearly 159, and that's about 2 full handles from where we are right now. Now, we also had a situation in the German Bund that stayed there for several days, and then late yesterday, when our market started to move higher, the Bund finally took out those highs of July, and it also started to move higher, but it moved marginally higher. It didn't go a lot higher like we did in our T-bond. So there's a little discrepancy between the German bond and the U.S. Treasury bond. But the notes also did the same thing. We have a lot of resistance in the notes, about a point higher from where we're trading right now, somewhere in the 128 level. We're trading at 127 and change right now, so just a little above 128 in the notes. We should run into a really strong pattern in these markets that we're following here at TFNN. If you have any questions, it's 877-927-6648, and we will try to answer them for you if I can. Now, we have a couple of things that happened with the with the gold and silver yesterday. Silver was very weak. Gold broke below the that 1088 level, which was the 618, and went right down to the 786 again and held at the 1081 level. Rallied about 10-12 bucks last night. Virtually stopped right at the 618 at 1094. But folks, we've had a really big breakdown in one of the precious metals that had a pattern that was able to hold up for quite some time, and that was at that 786 level. But what we did yesterday in platinum was rather interesting, because we were down about $30, $25 to $30. Yeah, it was more than $30 yesterday, and that completed the long-term ABCD pattern from 2014 to where we are right now. I double-checked these numbers, and the actual number on platinum measured down to 950 an ounce, and we got to 949, I believe, and so we'll see if this is going to be some type of bottom. I'm really surprised that gold didn't come totally unglued here. I mean, it had every chance in the world to do it, but it didn't. Now, silver came really close to the old lows. Down at 1432 was the old low. We got to 1435 yesterday, and then we had the low from last year in November when we hit the 1410 level. So I still believe there's a chance, because of that short interest in the gold, that we could get one heck of a short covering rally, but it certainly really hasn't happened, as of yet. That's the key thing is. One of the things that they're talking about this morning on CNBC is the fact that, this is the first time that some of these stocks have been below their 200-day moving average. And, if you stop and think of the big stocks, of the big six that make up the NASDAQ, which are Apple, Amazon, Google, Gilead, Facebook, and I can't remember the other one. Oh, shucks. Anyway, there were 6 of them that make up those things, and that they only one of them, Apple, has turned down below the lows of last month. Okay, we'll take a little break here, and we'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to have a guest at the half hour. Bill Koval from WDGA Analytics will give us his view of the market. I'd like to bring in other people to give us their ideas of what they're looking at, so he's got some things to discuss with us. That'll be at the half hour. But now I'd like to switch over to take a look at crude oil here, because going over the last couple of weeks on this 60 minutes chart, you see we've had a little bit of support around the $45 per barrel level. But what's so interesting about this is that last night, with China up 3.7%, the commentators were saying that the reason why there was such a strong rally in the Chinese market was because the strength in the crude oil, and it wasn't even up $1 a barrel. I mean, I said, wow. I said, they must really be grasping for trying to find why markets are going in directions to pick that one, because, that's really been beaten up quite a bit. We've dropped 10% here in oil just in the past, 5 or 6 days, along with some of the other things that have been, been getting hit really badly. So we want to watch that, very, very closely. Now, there's another market that is getting hammered along with the platinum and some of the others that we're watching, and that is the copper market. And I just wanted to bring this to your attention to show you that also, and so you could take a look at it. And let's see if I can find it. I just do too many things here at TNF and trying to find out, and I don't do the copper. Doggone it, I thought I did it. Well, I've evidently not. I certainly can't find it anyway, so we'll not worry about it. But copper's made new lows. As of yesterday, we got down way below the 230 per pound level in copper. And the old rule was that, copper had a PhD in economics, that if copper went down, most of the time stocks and stuff went down. But with the invention of quantitative easing and the internet, these things can be skewed by quite a bit. So we'll have to let the market tell us what's going on. We have had lower highs all the way through here with the New York Stock Exchange Index, and we certainly want to be able to catch this move on the downside if we should ever get one. But there's absolutely no fear in the market at all based on the volatility index that I look at. And all I'm saying is that this is the time you want to be extremely careful, because we've got a situation where these things could really turn very quickly, and the liquidity is such that, there are a lot of buying went on the way up. The problem is if these people try to get out at once, that's going to be a problem, because there's just not going to be enough, buyers to support people that are trying to sell. If you remember, Bernard Baruch's one of his famous sayings was one of the greatest scams on Wall Street is to inflate something to a high price and you'll get people to buy it all the way down. And that brings to mind what happened with Enron. I had my doctor in Tucson, a very good friend of mine I met 20-some years ago. His family owned Portland Cement that was taken over by Enron, and they did really well when it was $95 a share, but when it got to 65, he became a little concerned. And, he asked me what I would do. And I said, well, if it goes below 55, get out of it. And it went to 55 and 45 and 35 and all the way to zero. And the family never got out of it. And it hurt everybody in that family a great deal. There was some real tragedy involved with it. And I always remember that, people that were hurt because of the things that happened on Wall Street. And this happens a lot. If you can imagine what the lives that Bernie Madoff changed, with the thing that he had going, and also Russell Wassendorf at PFG, and, a lot of other people. So just remember, folks, you're the only one that can protect yourself. Nobody else can do that. So that's an important concept to remember in trading and in investing, is to take responsibility for yourself when you're doing this. And remember, the difference between an investor and a speculator is let's put it this way: an investor is a speculator who refused to use a stop. So remember that you do that to protect yourself against your markets, because these things can have huge runs, even if they're bearish. I mean, you can see some of these things that have happened in the past where the market is negative, and yet you have these, tremendous bearish moves. And the opposite is true, and that's why I'm watching gold, because gold has held up extremely well, during this last run. I mean, we have not taken out the 786 in gold from 2 weeks ago, and we've got big increases in open interest, and the market's not breaking. So it doesn't take much for gold, if it starts to pop above 1100, is going to, turn on some at least caution lights over there at the hedge fund USA, and we'll see what happens. We'll be right back, and we'll have Bill Koval of WDK Analytics as our guest.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we have a guest from Scottsdale, Arizona, Bill Koval of WDK Analytics. Bill, are you there?
Yeah, I'm here, Larry. Can you hear me?
I hear you perfectly. Now, I've posted the first chart, which is a article. The problem is I can't zoom in on it, so if the folks want it, they'll have to ask me, and I'll forward it on to them. But could you describe, what you want to talk to us about in this article? And what we'll do is we'll walk through these charts, that you've sent me, and take your time. We have time to go through them. I respect the work that you do, and I'd like to hear what you're saying.
Sure. Well, this first one, we don't have to look at it granularly. It's really illustrative of kind of the old school approach to looking at trend lines and volume, etc. And as you go through my charts, you'll see a marked contrast in the approach, where we see multiple paragraphs trying to describe how to interpret this volume histogram and catch the top in the market in Netflix back in 2011. it's really tough to get through and tough to understand. But if you'll
I have the second chart up now. The one that's labeled B, so that's up now. Showing the big candlesticks that you have there.
Sure. Well, this is a simplified version of the chart. I've done it on a quarterly basis so that you can see, whereas the other one was weekly. But these are all volume lines. The yellow one and the blue stair step and the red square, 3 volume lines that I've put on the Netflix chart of that time, and it's telling you exactly where to buy and where to sell. So, very simple interpretation, and it's kind of hard to make a mistake this way.
Well, that's good. It's hard to believe that Netflix got down to 11. I think it's selling a little higher than that now.
Well, remember this in that chart. I think it was in the hundreds of dollars. This is a split adjusted chart. So yeah, back in 11 it hit 16, but this is split adjusted. So now it is indeed back up in the hundreds.
Okay, now we have chart C up, which is the S&P 500, and then the corresponding chart in Apple. So do you want to go ahead and talk to us about this?
Well, here again, this is very timely because CNBC yesterday spoke of what's going on with Apple. Why is it going down? And they kind of whitewashed it and said, well, some of these funds are just looking at it as a source of funds. Instead of saying they're getting worried or they're losing money, whatever the case may be, the reality. But here again, we're looking at 2 different things. On the left is the volume histogram and a McClellan oscillator showing, Apple. On the right is my chart with 2 volume lines, the green and white, and then a red price line. Much easier to tell where the top is and to interpolate it. It's not breaking your brain to see what's going on.
Well, on these the volume, the red and green lines, you do this on everything that you're watching, Bill?
On pretty much everything. It's been about 10 years since I've been working with volume lines, and furthermore, I don't like these multi-paned charts because it sort of complexifies your interpretation, and I try to, partially at your behest, when I first started my newsletter nearly a year ago, you said I had too many lines on the charts, and I stepped back and said, yeah, I probably could simplify this a little bit. And I like to put the volume lines. It takes a lot of work to do this instead of having volume on the second pane. But it's so much easier to understand where the tops and the bottoms are is really the bottom line.
Now on chart D, you've got one which is the INX hourly chart, and it also has a very clearly defined line. And what is that green line on that one? Is that also a volume line?
Another volume line, yeah. Yeah.
Well, it does a very good job at determining the trend on this thing, because it certainly had the low and the high.
I'm sometimes I doubt him myself, and I don't take trades because I say, well, can that be right? But I've learned to trust them for the most part, and they're really working well.
That's good. Okay, now we'll move on to chart. Just 1 second here. Chart E, and that is another expansion of the INX on a 30-minute. And here you have a different color line. It's a purple one. What is that?
It's another volume line, as is the white-black square. I've got about 5 of these or so, and they all work rather similarly. I like to pair them with price lines, of which you'll see later, and I'll illustrate. But here's a nice one, because yesterday, as the market was falling down from the overnight highs, as is a common pattern, they'll try to push it down and scare everybody out, and then run it back up from mid-morning onto the close. Well, this simply illustrates how those bars started to narrow at about 11 o'clock, and and these volume lines cut price right where you should be buying. So
that's usually what happens with the market, is it tricks you at the wrong time. Now, Bill, the next one that we want to talk about is the crude oil market. This is something that I always watch because I enjoy trading crude quite a bit, and this has certainly been in a downtrend, and the volume seems to have really helped pinpoint this one also.
Yeah, we've got the blue line, or the blue squares, is the volume line. The other one is a price line. That's a modified MACD, which I've created, and to use as a foil for the volume. I always like to have a price and a volume line at very minimum, so that I can compare and contrast them to see that they're saying the same thing. Here, on a daily basis, it does indeed look like we're seeing lows. The truth is, however, that what you would need to do in addition to this chart is throw up like a 60-minute chart or something a little bit shorter to see this more granularly and make some judgments. But I could I could create a duplicate of this or a separate one on a smaller time frame and make it probably even a more accurate judgment.
So what you try to do as you're coming into some of these is to go from a macro view down to a micro view, like a daily to a 60-minute to 30-minute, to confirm that this is actually what you're seeing so that you can reduce your risk.
Absolutely. Any analysis needs to start from the top down, weekly, daily, wherever you want to start, but you need at least 3 time frames in order to have a feel, and I oftentimes use several more than that even to get real granular, to try to get the timing down accurately.
Okay, now the next one everyone has an interest in, and that's the S&P, and you have a daily and weekly up here. So you want to go through this as your chart G with your yellow volume lines. You want to describe what we're looking at here on this longer term basis? Yeah,
Larry, this one I kind of run regularly in my newsletter, and because it's easy to understand. The yellow line is a volume line, and here we're comparing just a daily and a weekly side by side. Give me confidence to anticipate that the market is going to be weak and go down, which, by the way, they're fighting tooth and nail to keep it up, but I do expect it to go lower. The fact is that this line, I think you're going to see one more chart to make this clearer, but when volume cuts price at the bottom or the top is when the turn happens, and if volume in general is above price, it means it's pushing down on price or overbought. On the other hand, on the left chart around the 9th, where you can see that volume line below price, where it cut price from the upside was coming down through it, that's an indication that you should be going long.
Mm-hmm. So right now the trend is indicating that we are moving in a lower time frames, or we're going lower.
Exactly. I mean, not only do the bear bars look like that, but that volume line is indicating that volume at least is overbought.
Okay. Now, the next one that we have is we're going down to we're going down to the micro view now on this, looking at the same types of technical things you look at with the E-mini, and this is a 15-minute chart on the E-mini, and you can see the red and the white and the green are all turning down, and that was the time to see it go lower. It went quite a bit lower than that yesterday.
Yes. Now, just one clarification. This is a 120-minute, at least if I'm looking at.
I'm sorry. I saw ES15. That's the year.
Yeah, that's
it was September 15. I'm sorry. It was the contract month. I looked up, and now I see it's an hour and 20-minute one. Yes.
Sure, no problem. But in the left part of the chart, you can see how neatly at the tops and the bottoms, these volume lines and the red price line indicated where the tops and the bottoms were. one thing that these charts, one interpretive point that you need to understand about these charts is, like on the right, where the lines are falling below price, the scale is getting a little bit off there, and what you need to do is drop down to a 60-minute or 30-minute and get that rise and narrow down in terms of the volume line, and to be able to interpret that a little bit better. So,
Bill, I have a question. When you move down between a 120, 100, like a 2-hour chart down to a 30-minute chart, does the characteristic of that chart help you determine whether there might be some significant changes in volume occurring that you might not see on the 120?
Oh, sure. Absolutely, yeah.
Okay.
Matter of fact, it's just a necessity because, contrast, looking at a volume histogram or a volume pane in, say, pane 2. If you had volume up and even just volume as a line instead of a histogram, it's all on one scale. What makes these so accurate is it's a relative scale, which is great. It helps you nail those tops and bottoms. But if you back out too much on the frame, the lines get weirded out. So.
Okay, the next chart we're going to take a look at here is the one with the chart I, which is the daily of the dollar INX. So you want to.
Yeah. Again, the blue volume line dead on in terms of determining where the buy and sell points should be. The pink lines are a linear regression end channel, which I use along with many different lines. This one shows a Hull moving average, just simply to corroborate what volume is saying and to try to pick the support and resistance areas.
Okay, and now we have Bill. We're going to come up to a break in just a little bit, but I'd like for you to stay with me because I want to give the folks information on how to reach you. And the next one that we're going to look at here is the it's the SPX, I believe, second to the last chart that you had, chart J. And then what we'll do is we will probably have a break soon while you're talking on this. When you come back, we'll let the folks know how they can reach you.
Sure.
So fire away.
This is the S&P XXX ETF long, and it's the red area on the left is showing the top, of course, and then the bottom is highlighted in green. This illustrates two price lines, the black and the red, and then the purple volume line. This is a classic I like to set up because it creates a channel. And when the volume hits price, in the middle of the channel is almost invariably the top and the bottom. So it helps. As you get further to the right, you see that smaller bounce there. The black line keeps its proportion, but the others, because they're relative lines, they get weirded out. So all you have to do to bring it back into perspective is just drop down to a 30-minute, and you'll see those all in proportion on that shorter bounce.
Okay, that's good. Bill, we have to take a little break here, so stay with us, and then we'll be right back with Bill Koval of WDK Analytics after this break.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, and we're wrapping up with Bill Koval of WDK Analytics. And Bill, I've posted into the Tiger TV and the Tiger Room the information on reaching you, and it's WDKanalytics.com. And then you have the Bend the Trend newsletter, and you're willing to send the folks a copy of the slides and a free issue of the newsletter by just asking for it. I guess that's correct.
Yeah, Larry, that's exactly right. Just by going to the website that you see there along to the newsletter tab, a viewer can enter their email address and then get these two different sets of these volume and price slides, as well as a free subscription to the newsletter itself, which deals with market timing and analyzes market internals in depth, and it's quite educational as well as being accurate in terms of the market. So
You send out special reports too. I've noticed that I get those, and they'll come at a irregular time, which is good, because if you see something specific, you send it out immediately that there's something occurring that you need to focus on. So I think that's also rather timely.
Yeah, the newsletter has grown, and there's a lot of material in it, so it really helps to highlight and to do special treatment of things by doing that. So increasingly, you'll see more of them.
Okay, good. Well, listen, I want to thank you for being on the show. We'll have you on in a few more weeks, but if something does, light a candle for you, be sure to drop me an email or a phone call, and we can have you as a spot guest really quickly, because I do respect your work a great deal, and I want to thank you for joining us today.
Well, listen, Larry, you're very welcome. I enjoy it very much, and I listen to you a lot offline, and I'm happy to be back again, and we'll go from there.
All right, thanks a lot. That was Bill Kowal of WDK Analytics out of Scottsdale, Arizona. Okay, folks, we're got just a few more minutes here on the show, and I just wanted to mention that, we still have some negativity in the market. It's having a little bit of a rally so far this morning after the down day yesterday. As long as we don't get above 2110 in the S&P, it looks like we could be going lower, but we'll have to wait and see. This is it. So live every day in an attitude of gratitude and do something kind for someone who has a lot less than you today.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.